Faze, how we doing? Welcome everybody. I got something to do. I'll be back in like 1 second. Okay, we're back. Welcome, Faze. How we doing? We got burnt peanut in the house. Ish, how we doing? Good. Welcome everybody. We'll give it a few more minutes here. Gotta make another post. Dude, that was wild. What's up with the healthcare guy passing out? Maybe you should be telling us about our healthcare. like that description. Do that. I love Ant Stop. Okay, I'm gonna make one more post. Just a few of us tonight. Let's see, give me 1 second here. And we'll get to rolling it. Okay. Got my post made. Give me 1 more second. Okay, welcome everybody. How we doing? Small class tonight. Great, whatever. All your questions will be answered. That's I like doing these small ones because we can answer any questions possible. And so yeah, no, shit, dude, yeah, Bert Peanut knows, dude. I used to host Friday classes just so we could basically get together and yap, and there'd be like 15 of us in there. So I love this kind of thing. Happy to have you all here tonight. Or so welcome everybody. As long as Norman's not here, welcome everybody. Dirty River, happy to have you. So for anybody who doesn't know, I'm just doing for basically the next month, little trading crash course. It's things that I think everybody should know at least a little bit about, some like, basic chartings, indicators, how to use them, how to look at them, ones that I think work versus don't work. And then, we're going to talk some market statistics, building trade plans, just, a really like, don't get me wrong. You are not just going to be a great trader after, listening to me yap for 4 or 5 hours, by the end of this, but you'll have some basics. You'll have some things that will really help you out. This in no way is a beginner's course or anything like that. I think all traders can benefit from this kind of thing and looking at these kinds of things. And, we all, every once in a while, need to be reminded to take it back to basics. Most of you have traded with me in VC or talked to me on trade floor or whatever it is. You guys know that I keep trading as simple as I possibly can. I like to just look at the whole market and let the whole market tell me what to do. So I use indicators. Most of you probably know the indicators that I use, but we're going to talk about the ones that I use most days, when we're trading in a voice chat, those kinds of things. These are going to be the indicators that you see me use. And then we're going to talk about some other ones that are not used all the time. A lot of people have been taking B band trades with me lately, and so we're going to talk a little bit about B bands, and then we're going to talk about just a couple of the indicators that I like to use on some longer time frames, not just for not necessarily just for swinging, but more for kind of understanding where the market is. So, with that, we'll get rolling. I think one of the big issues that um, one of the big issues that people have with indicators is they think they are this, foolproof, you can't do wrong. Oh, the candle hit the 9 EMA, I'm buying calls or I'm buying puts, indicators aren't like that. When I made my post about this class, I said, are they essential for trading? No. In my opinion, they are not essential for trading. However, they are a very helpful tool. You guys know when I teach or when I'm in or when we're trading in voice chat or whatever it is, I want as many forms of confirmation for any trade that I'm taking as I can get, I'm not just going to look at SPY at a level and say, I'm buying calls. I'm going to look at all of the big names and say, are all of these big names at a point where they could bounce and SPY's on support? I'm going to buy calls. I need confirmation. So for me, that's what indicators are. They're just an additional form of confirmation. I will say that how I use them, and we're going to talk a little bit about how I use them tonight. Obviously, we'll get more into it in the trade plan lecture here at the end of the month. But we're going to talk about how I kind of, like to use them and ways that I use them. And, as normal with my trading, I definitely think of indicators in a much different way than other people do. For me, and I guess we'll kind of get started. I should get just kind of everything off this chart, huh? So for me, as I said, indicators, are they necessary or anything like that? Absolutely not. You can trade a blank chart. I think you need some support, resistance, trend line, whatever it is. But the best way to think about indicators is that they're really just another form of support and resistance, specifically when we're talking our EMAs. So that's what we're going to start with tonight. I've used a bunch of EMA combos over the years, and settled on just some things that I like. And so, I did the 9 EMA thing forever, got that off the charts a while ago. I mean, it just lived on my chart, even though I never used it. So for me, no 9 EMAs for me. They don't provide the types of trades that I like to take. So some of the EMAs that I personally like, and I think people can really benefit from having on their charts, are the first one that we're going to talk about is going to be our 20 EMA. And then that's it. We're just going to give it a color. And then the next one that we're going to talk about is going to be the 50 EMA. And so we're going to talk a little about what that means, and how do we use them and all of that. So we have our EMAs on the chart right here. Our light blue is going to be our 50, our orange is going to be our 20. Well, when you hear people say these numbers, 9 EMA, 20 EMA, a lot of people don't even know what that means or what that number represents. And so when we say something like a 20 EMA, what we are saying there is that it is looking back 20 candles of whatever time frame we are on. So when we are looking at this 20 here, where if this candle is just printing, this where the EMA sits is the average price over the last 20 candles or 100 minutes, just an hour and 40 minutes. So we're getting average prices for the last hour and 40 minutes. That's what an EMA is showing us. So we know when EMAs are going down, it basically says, and we're under them, it basically says, the average price is higher than where we are trading right now. And so we know shorts are making more money. If we get above them, that's where it starts to change over the last 20 minutes, or sorry, last 20 candles. We know that people are starting to make money. Well, when we have strong trends, that's why you see defense at these EMAs. We trended down strong and we had trouble getting over the EMAs, and it ultimately just, nice moves, but sideways us out into close. So when I use EMAs, and this is going to be weird for a lot of people to think, I don't really use them for entries personally. It's not something that I like to use for entries. It is something that I like to use for targets or stop losses. So say we're getting this nice move up right here. I've seen a pattern that I like in the market, so I want to be long, maybe even right here. When we get this move above the EMA, I am trimming at the EMA, and once we're above the EMA, my stop is the EMA. Any move under there. I don't like to take entries off of them. Like, I won't buy this on this break and retest of an EMA, because I just don't see the reward that I like right there. Knowing we got another EMA right overhead, we got resistance right overhead. I don't want to get a couple nice candles and then get chopped for 45 minutes like happened here. So when I am using EMAs, I don't like to use them as entries. I like to use them as targets and stop losses. So again, on something like this on SPY, this is actually a trade that I mentioned today. I think it was in Pro maybe, but we had a nice little wedge bottom setting down here. That's a setup I like to look for some sort of reversal. And then we set a wedge bottom, and then we set basically a triple bottom right down here. So to me, this is an entry every single time. And yes, we're below the EMA, and yes, we're trading against the trend. This is a nice setup for a reversal. So we trade to the EMA. We trade again to the EMA, and those are our targets. That's really my main use of these two short time frame EMAs. So does anybody have any questions on those? Again, they're just really nice trend dictators. The 50 EMA is again one where we know it's oftentimes going to be kind of a battle. You might get some breaks above, you might break back below, because the 50 EMA, just for a little more description on it, we know if we're on the 5-minute chart and we're looking back 250 minutes, we're looking back 4 hours. So are the bears going to want to give up the control they've held for the last 4 hours? No, you're likely going to see some fighting there. It's going to work like that all the time. I mean, sometimes it'll be a few candles of fighting, and other times it will be, it will be quite a few candles of fighting before ultimately they give up, or the bulls win and they reverse it on the day. But that's really all I use EMAs for. I don't like them for entries. I know a lot of people love like a, push down and a retest of the EMA, use the other EMA as your stop loss. I like that, but then you can find yourself in these types of situations where maybe you short this EMA, and then if we reverse, you've got yourself some pretty big risk. So I like to use them as targets. Then when broken above, use them as my stop loss, stop loss in profit. And that's for, we're talking 20 and 50 right now. These are just ones that I think most people should use. So any questions on that one? Nope, love it. Okay, next one that we're going to talk, and really, in my opinion, used in conjunction with with those 20 and 50 EMAs, is VWAP. So when you load VWAP, if you're on Thinkorswim or you're on, I don't know what the other brokerages have, but when you load VWAP, you need to go into the settings, and there's going to be an upper band and a lower band. If you're on Thinkorswim, click on them and click show plot, and it'll get rid of them. You don't want those on the screen. I won't say you don't want those on the screen, but there's better tools for that exact thing. So we load our VWAP, and it's just going to be this one line on the chart. So you guys know that I love VWAP, where this is part one of my favorite indicator combo on the planet. So part one is VWAP. And so what is VWAP? Volume weighted average price. So based on, and you guys also know I like volume. Uh, so based on volume, what's the average price paid today? Use TradingView and yours looks different. Well, DM me and let's try to go through the settings. Because I'll tell you right now, Thinkorswim's VWAP is just undefeated. So VWAP is interesting because an EMA, so an EMA, the math is slightly more technical, but basically what a moving average is telling you is they're adding the close of all those candles together and dividing by how many there are. That's literally the math for a simple moving average. The exponential puts a little more weight on recent price action. That's why it's EMAs are more bouncy than SMAs, is because of that heavier weighting on more recent candles. Well, VWAP is different. VWAP is based on volume. Based on volume, what's the average price paid? And that is what VWAP is showing us. So it is oftentimes going to be a very strong line on the chart because it is the line based on volume intraday of where one side loses control and one side gains control. If you are trading pretty solidly below the VWAP, you should be looking to short bounces. That's what we were doing early in voice chat today. Part of that logic today was the sell under VWAP into the open, quick failures. We missed the short here. Maybe we caught some of this short. I don't remember. We were looking short because we knew after a big strong day yesterday. I mean, sold into close, but big strong day yesterday. We knew there was some buyer control, and gapping up or running up in the after hours. When we're under VWAP, we know based on volume, the price is lower than the average price paid. So shorts are making money, bulls are underwater. That's what VWAP tells us. And the other great thing about VWAP is because it's based on volume, time frame doesn't matter. It doesn't matter if you're looking at the 15, it doesn't matter if you're looking at the hourly. It's going to look a little different because you get more clustered up, but no change in the value of VWAP based on time frame because it is completely based on volume. So it is it is a very important spot in the market. Like I said, it is where one side gains or loses control. One of the big arguments against indicators is that, hedge funds aren't using them. Big money is not using them. And that, to an extent, is true. However, VWAP is different. You'll hear I'm talking VWAP on CNBC. Anybody who trades imbalances stays up to date on VWAP. They want to know where that volume lies. So if any of you guys trade MOC with me, those market on close and balances at the end of day, and you will oftentimes hear me, oh, we could track a VWAP on this. That is because when these very large orders come in at the end of the day, they will oftentimes want to be at VWAP because that's the average price paid. So it can land you in this, if you're the one selling or buying, you land in a better situation as far as losses. You land neutral around VWAP. So this is a line that my personal belief is everybody should have on their charts. If I had to pick two indicators to have on my charts, this is one of them. I absolutely love it. It's a very important thing for the market. It's not just a candle-based indicator. It is a volume-based indicator, and it gives us this look into where the market is overall positioned. Where this one's a little bit different than EMAs, I will take trades off of this. I will use VWAP as my entry. Double tops at VWAP, double bottoms at VWAP. Those kinds of things some of those are my bread and butter trades. And so I love VWAP. I know I said in my post that indicators are not necessary. I will not say VWAP is necessary, but I will say VWAP is helpful. Another great thing about it, it's very easy to back test, because you can see when we get above VWAP with some strength, we're often going to carry. If we break below VWAP with some strength, we're often going to sell. If VWAP's just kind of flat on the day, we shouldn't be looking for any big old breakouts or breakdowns or anything like that. Market's just going sideways, trying to end itself around VWAP or close. So we'll see it all the time that the market ends the day around VWAP. I'm not saying, if we're way below VWAP and it's coming into close, you should just get long looking for a move to VWAP or anything like that. But understand that it is oftentimes going to be a target, and it is oftentimes going to be a turnaround point. When break over its fail, you can see some nice selling. When break over its work, you can see an explosion. So VWAP, very, very powerful tool. Again, we aren't really talking, trade plans or anything like that tonight. We'll talk more about how to use it in the trade plan lecture. But any questions there? Let's see. Oh, this is Thinkorswim. Everybody got it. Yep, TradingView. I saw that one. Yep, these
Hey,
are recorded and posted later. Okay, no questions there.
hey,
So,
River.
oh, yep. How we doing?
Hey, how about the 200 EMA? How does that work, or what does
Um,
that convey?
mm, so are you talking short time frame or long time frame?
Let's say intraday, like short time frame.
So we can pull it up. And did you say EMA or SMA?
200 SMA.
SMA. So I use, and we're going to talk the SMA here in just a second. The 200 SMA, as a matter of fact. I don't make much use of it on a shorter time frame, and I'll show you why. It mattered today for one candle. And so I don't like a cluttered chart. I want something that's giving me interactions throughout the day so that I can, you know, it gives me interactions throughout the day so that I can do some things with it. There's no denying when these things break that you can see big moves off of it. It kind of gives you a view of a long, how we learned last week to chart our daily levels for support and resistance. So we know 670.6 mattered on the daily, but we can still watch our 5-minute chart. Well, with the 200 EMA, or SMA, it's interesting because you're looking back for 200 5-minute candles. So, I mean, I'm bad at math, but what, 16 hours, something like that, worth of 5-minute candles is in here. So, my bigger issue with it is it won't it will rarely matter. Once you're away from it, like say you're buying this bounce and you want to, your stop will be below it. Your stop will be below it. Well, great. But if this thing runs $6, $7, whatever it does, your stop better have nothing to do with this 200 EMA. If you're going to let this thing flush $6 against you and stop you out at the EMA or SMA, whatever it is, it's relatively unhelpful. Of course, it's big. Let's find a day where, You get a break above it. You can often find at least a scalp, a break below it. You can oftentimes find at least a scalp. But because it oftentimes has so little interaction throughout the day, or it's at a point where I wouldn't put on a trade, I have never found, here's a beauty on it. I was looking for one where it was going to work really good. I have never found it to be useful for me. I will say an advantage to it is if the 200 SMA or EMA on shorter timeframes is part of your trading strategy, it will help you not overtrade. That's the kind of the advantage of it not coming into play a lot. Because if you get there, you know that you're going to get a reaction. But you also know that might not happen every day. It might only hit it once or twice a week, sometimes, that kind of thing. But if it's working for you, use it. We're going to talk how I use some SMAs here in just a second, as soon as we cover my next indicator. Did I answer your question for you? I hope you. I kind of yapped there.
Yeah, yeah.
Okay.
No, thank you.
Try to give Yep, perfect. Okay, so next indicator that we're going to talk here. So if you are not on Thinkorswim, I do not know how you can use this on your trading views or your Weebles, any of that. It's Robinhood, obviously, probably not on there. But so what this is and I've shared this indicator in my tab. If you can't find it and you want it and you're on Thinkorswim, message me. We're going to talk a couple other indicators here in just a second. If you want any of them, message me, or they're posted in my tab or anything like that. And so what we're doing here, multi time frame EMA. Um, uh, and we are talking the hourly 20 moving average. And so what this is, it is a 20 EMA. So we know it's looking back 20 candles, but it's from the hourly chart. However, I like to run it on my short time frames. When I was saying if I could pick two indicators on the planet to use over and over again, they're my only things that I can have on my chart. You're looking at them right here, VWAP and hourly 20. I love this because it is giving us, you guys know that, while I trade on short time frames, I think in big time frame mode. So this is showing me the 20 EMA from the hourly chart. And so we know the 20 EMA is looking back 20 hourly candles. So it is virtually showing us, in a 24-hour period, 2 full days of trading and where people are positioned based on that. So this type of setup, VWAP going under hourly 20, this to me is a short every time. As you guys know, I missed this short today. It hurt me all day long. Thankfully, we talked it and a couple of people got it, but I didn't take it. This to me is a short all day long. When we have that, the average price based on volume is now gone negative. So people are either losing money or making money short. And we have now given up the uptrend that we had for the last 20 hours. We start to look short. On the other side of this, we caught some of this bounce. The trend has not reversed, even though this is a nice big reversal, until you reclaim this. To me, that's how I view these things. For me, it's unfortunately not as cut and dry as if we're under VWAP in the hourly 20, I'm only shorting bounces. Because overextension is a thing. I would rather wait for the overextension and buy the bounce back up, or catch early moves in the trend. I don't have any interest in trading this stuff here. I have interest in trading here, and I have interest in trading here. The middle of the road stuff is where it gets, muddy. So this to me is the most important combo you could have on here. And I use this every single day. I should show you guys. So when you guys see my charts, that whether it's when I'm streaming or whatever, this indicator shared as well, you'll see this. This is VWAP on the bottom, hourly 20 on the top. That's what you're looking at right here. It's red when VWAP is under the hourly 20. So, we can kind of be looking to short bounces. And we know until it gets above it, the trend is not fully reversed. It's green when VWAP is above hourly 20. Also, and this is fancy and unnecessary. Shout out Assassin. He's My guy, I love him. But when the candles are below VWAP, VWAP also appears red. So we know there's a lot of bearish going on here. When the candles are above VWAP, VWAP appears green. So to me, this is like the greatest combo around. We love seeing this kind of thing where we break above, we get some big, healthy, gets these nice pullbacks. We can look to be dip buyers on this when we get this type of, these types of flips. This is where it's amazing. We are literally watching based on volume and based on the last, 2 days of trading. We just watched bulls take control right here. Over here, after this is full day, full night of trading, we are watching the bears take control right here based on the volume. So to me, this combo is just mind-blowing. We know if we spend a lot of time between, if we're just kind of, we haven't had many choppy days, when we got this kind of action going on, we know that we aren't expecting much. Flat VWAP, flat EMAs. The move was made and they're chopping us out. Great combo to tell you, are we trending? Are we ranging? I mean, don't get me wrong, this is a range, but we knew where the market was headed based on these things, based on their direction. Overextension comes, we can, of course, look for bounces back up to it. But to me, this is the greatest thing ever. uh, yeah, Kush, we are not going to talk fair value gaps in here. I'll tell you what, you should just stop even looking at those while you're ahead. Yeah, but avoid those. So let's see. VWAP is a very good entry point, stop out point. I love this kind of combo, where maybe we get this break above VWAP, but we're hitting the hourly 20. I'll short this thing like every single time. No questions asked, double tops, hourly 20s, that kinds of things. Even breaks and retests. I love dip buys back to it. Great targets, great entry points. This combo together is money. However, it's wrong sometimes. Like it's not foolproof. It's like you can't, like, nothing is 100%. You need a lot more than just this to say, okay, I'm going to do it. If the whole market is lining up and you're getting this on a SPY chart, you are set. Yeah, just run away from ICT. Go learn from the people he stole the ideas from, and then he made them worse. Go find the real people who made them up. Your Al Brookses, your Wyckoffs, your Dows, your Linda Rashkes. Those are all the people. Break and retest is all about speed. Here, failed breakout here, break back below. Here's your entry. Here's your stop. Like that, and of course, like I said, I'm never just going to trade the SPY chart, but for simple explanation right here, we broke down, you're buying here, you're stopping here, I mean, a simple cut and dry strategy will work over and over again. And then, maybe target your lows or whatever it is. Of course, this one went a whole lot more. But there will be times where you push up to it, you pull back down, maybe you think you're shorting a double top and you get blown out. It's not, nothing is undefeated in this market. You always have to remember that. These are additional forms of confirmation. Okay, so with that, we've done some shorter time frame. At the very end, we're going to do one more short time frame thing. But the next thing that we're going to look into, like I said, my intraday trading, you will see. Well, if I'm being entirely honest, I've actually now personally removed the 20 EMA. So here's my chart when I trade every day. I got a 50 EMA, I got VWAP, I got hourly 20, I'll have my daily levels, and then I'll play the intraday price action. That's what I do, I will, that's how I like to trade. I like simple. I don't want much on my charts. I don't want to have all these, weird lines and craziness going on. I merely just want to look at a couple things that I know are important and are all kind of bigger picture things. Hourly 20, I love because it's showing us 20 hours worth of information. VWAP, I love because it is showing us where the market is positioned based on volume. And then, those two together, obviously money. And then the 50 EMA, I like as a trend definer. If this thing's going strong down, you can still be looking to short some bounces. Obviously, when the market tells you to, not just short every red candle. It starts getting sideways or we start getting above it. You definitely want to, not be shorting bounces at that point. So just a few little things on your chart. I guess so. The next one that we'll talk about, these aren't necessarily indicators, but these are something that you will see on my charts as well. Again, free to anybody who wants them. That's what it's all about. So I like volume, and you guys know I like volume. Um, Look at volume all the time. Um, right up here. So this is, give me one second. Oh, I didn't realize that I forgot that I already loaded mine. So uh this is buy and selling volume on the day. So volume is a little tricky because volume is an average. Volume, buying volume merely means being transacted at the ask or above. Selling volume means below the ask. So, this is crazy. And I've talked about this on time and sales and stuff. Pinning down are they buys or sells is tricky without level two, is what I'll say. However, I like to look at these numbers to have an idea. Do I care what the specific number is? Not really, to be entirely honest with you. So you'll see up here on my chart, I run two instances of the same indicator. What this one right here is showing me on the left is our overall buying and selling volume on the day. What this one over here on the right is showing us is the overall buying and selling volume on the current 5-minute candle. So how do I use these? Well, daily means virtually nothing to me. There's very specific times where it means something to me. Um, I'll glance at it and say, yep, bears are in control. That's about the extent of what I'll do. However, where I care is when these flip. If we have sold down, now we're starting to take a nice bounce. And I'm sure right around here, the buying volume was likely about to pass the seller volume. And ultimately, the sellers took control, sold us into the end of the day. But I like to watch where points of flipping happen, where buyer volume overtakes selling, selling overtakes buying. Why? Because it's one side giving up. And that's always what we want to know what side's winning and is there any sort of change about to happen? So if we see, we've sold and we're taking a nice bounce and we're seeing buyer volume start to pass seller volume on the day and it's holding, that can be a little bit of confirmation that the move upside is going to continue. I don't care about the number. People get too hung up in low volume, high volume when they have no idea what it means. We care about the switch. That's it. On the short time frame one, the 5-minute one, and you can set this indicator, like I said, anybody who wants it can have it. You can set this to whatever time frame you watch. Maybe you trade the 15 or the 30, you can have that, whichever time frame you want. However, the 5-minute, I care even less about. If I'm long, I want more buyer volume. If I'm short, I want more seller volume. That's the extent of what I care about on that one. Where it can be helpful is when you're at like a strong level to see if all of a sudden the buyer volume is like really picking up and you're going to break over it. That's the most common use for volume because you'll see volume before you see a break. So you can use volume to help you a little bit there. But for me, for the most part, I just want to say, hey, I'm long, our buyers buying. I'm short, our sellers selling. That's what I care about. I don't think it's worth it getting too hung up in volume. But it's going to lead us into our next volume indicator. So like I said, up here, we use it. We're interested in who's on control on the day. We're interested when these flip. And on the short time frame one, uh uh we are interested in our side winning. We want to visually see our side winning. We don't care about the numbers as long as our number is higher. That's what we want to see, candle after candle. Down here, this is much fancier indicator, bunch of stuff you probably don't even need to care about. Available to you if you want it. So what we're seeing down here, you can see it's got a couple fancy colors. It's got like some lines on it. What I care about more is these up here. I use these candles down here. I don't really care about the colors of them. These blues and purples show like, like like deviations of buying or selling. They aren't super crucial or anything like that. In fact, like look at this one. There was just massive buying on that first candle to then get clobbered all day long. I more use this one, and I would never like this isn't like TA, but I'm like, okay, volume is decreasing, and now we're seeing some spikes in volume like you want to see into the end of the day. I'm just looking at the trend of the volume to see when some volume is showing back up. What I really like is this. So this shows us what percentage of this current, and it says bars, that's candles, bars. Us old guys call them bars. Current bar selling. There's apparently zero seller volume on the current bar. We can confirm that by looking up here. In the last 9 bars, though, so the last 9 candles, the last 45 minutes, it has been 79% sellers. In the last 60 bars, it has been 48% sellers. So we know that it was, and we see it's gone basically sideways. So it's been about 50% selling and buying for the last 60 candles. So I like to see these averages again to say, okay, are we starting to, are we shifting one way? I'm in this trade and I'm in calls, and we've had, the seller volume on the 9 bars has been higher. The current bar selling is higher. The 60 bars sell is higher. Why am I long? Use it kind of to confirm your trading. But don't ever get too hung up in volume. And keep in mind, we're dealing with 69, well, 85 million shares traded today on the S&P. We don't care if it's 85 million. We don't care if it's 80 million. What we know is when volume is lower, the market moves easier. When volume is higher, it can be more volatile, but it can be more difficult to get it to move big moves. Low volume, we will just grind in one direction all day, oftentimes. So that's all I got on volume, those 2 indicators there. And now we'll start getting into, let's see if we got any questions. So range trading is tricky for people. Just start drawing boxes. Like something that I would recommend, like my eye sees them, because like we know the market does 2 things. It ranges and it trends. And a trend will always turn into a range, and a range will always turn into a trend. We don't know if it's a continuation trend, a breakdown trend, whatever it is. So what we like to do is anytime we see some sort of resistance form, and then we see a hard sell down, and then we bounce. Okay, here's our range. So we've identified our range here, by our highs here, our lows here. And maybe this range breaks down, maybe it doesn't, but we always want to identify a range as quickly as possible. And how do we identify a range? We look for a top or a bottom. So we identify our top where consolidation started happening. We weren't breaking up. We weren't breaking up. We weren't breaking up. We ultimately pushed down, and we got a strong bounce up. We get a two buck bounce up. Well, here's our high. Here's our low of our range. We know if we get below that, we can look for a move down to this next level. We know if we get above that, we look for some sort of intraday resistance or whatever it is, and we take that move up to it. Maybe on this one, your range breaks, and you got EMAs and VWAP right here. So maybe you don't want to be long. But as soon as we set, it's the same as on daily timeframes. Doesn't matter if you're looking at a daily, a weekly, a 5-minute, analyze it all the same. We know the high of this, we know the low of this. Once those are set, we've identified our range. And so now, sure, it took, I don't know, an hour or whatever for that to be set. Well, now we have information for the next 2 hours of the range that we're trading in, where we know where we want to be long and we know where we don't really want to be long.
Hey, River, another quick question.
Yep.
So I usually like chicken out with a small pullback, but if I stayed in the trade, let's say, for example, today, I took the trade and then I trimmed half of my position um, early into the the first 3 or 4 candles. But
Uh-huh.
how do I identify whether it's a pullback or a reversal? I think one of the you already answered the question, but just trying to understand on the chart.
So okay. So excellent question. Very difficult to answer. There is varying levels of reversals. Um, is it a small reversal? You might hear me talk about a reversal candle. Here's a reversal candle. And once this is printed, this is a reasonable entry with your stop right here. So this is a reversal, but it ultimately sold right back down. Um, you need to have it in your trade plan. And I should say, don't go hunting reversals for day trades or anything like that. Hunt reversals for scalps that can turn into a nice entry for more of a day trade. But when you're looking for some sort of, reversal bounce play like this, my rule of thumb on, scalps, I want to be in there for 1 to 4 candles. So maybe I buy this reversal candle, I hold for 1, 2, 3, 4 candles, I'm done. We've bought back up to this resistance. This is where I want to get out. So that needs to be part of your plan when you do it. Like I said, this, today was an interesting one. Big selling, trend break, look at that trend break retest, move to the upside. I still don't consider this a full reversal. Did we get a very nice bounce? Yes, but we didn't even reclaim half. I mean, maybe we got about half of the selling reclaimed. The real reversal comes when you start getting above moving averages, you start getting above high of days. That's a true reversal. But if you're just looking for these types of trades, you take your scalp, you look for your, 1, 2, 3, 4 candles, whatever it is, you bump your stops up. Then, if the market provides you another entry, you do the exact same thing. And sometimes you're going to get the little bounce and you're going to get stopped out in profit. Sometimes you're going to pull back and you're going to buy down here when you see, you can do the exact same thing. Pull back, trend retest, low of range, halfway decent reversal candle. You buy somewhere around the close of that candle, stops under the lows of that candle, and you look for a move up. Then say you bump, I don't know, you bump your stop to right here, your daily level, your opening range, and maybe you can catch some more move. So when you take a trade like this, you aren't looking for this, but sometimes you get this. You're looking for this, but when you're lucky, you get this, re- catching a real reversal is not what you should be looking for. You should be looking to buy or short at likely places. And if it turns into a reversal, that's great, but a real reversal is, technically speaking, not confirmed until you've broken previous highs. That's where a true reversal occurs. But I would call this a reversal. And then I would get ridiculed when it sold right back down. And then I'd be like, oh, nice reversal there. And even if this thing sold back down, I'd get ridiculed again, but I would still call this a reversal, even though we ultimately sold right back down. A reversal is a breakout, and most breakouts fail.
Okay, well, thank you.
Yep. Levels are found all from daily time frames, and really, no. I'll use previous day high and lows, but only for intraday price action. They rarely, unless on the daily chart, they end up telling me to put a level there. They're intraday levels that never find a spot on my chart. I like levels that can live there forever, and so that's why I buy, or that's why I get them off the daily chart. 1K, a lot of people deal with the same, and so like you know this is not uncommon. Long consolidations at these openings where you don't really get the move. I will short a double top. I won't short a triple top. Like I won't, because especially like in a at the opening range, especially in like a bull market where they want to go up, even down here, I'm not shorting this, like I'll want to be long, but I'll wait until we get the fake breakdown long, But this market has really for the last little while, it has just been disrespecting opening ranges nonstop. So they they've become a lot more opening range in recent times has become much more of targets other than on bull trend days. Bull trend day, I don't know where the opening range was set right here. Bull trend days in a bull market, I'm looking to be long above it. It's, as with all trading, market context. I do remember this one. We caught this one. This was like triple bottom at opening range low. That one was sick, But bull market, look for bullish trades around the opening range instead. Oh my god, you guys are so funny. I do love coffee. I'm drinking some right now. Mm, oh, great question. Sometimes, I won't say all the time, but yeah, sometimes weeklies are great. But I like weekly levels. I like, I'll show you. Oops, don't look at that. We got some scalping levels here. I bet this one's blank. So I like looking at the daily time frame because I think gaps are important, and I like that you have more detail than a weekly. I can mark this level right here on SPY, and there is a very good chance that it's lining up with a weekly level because how I chart levels is I look for what I describe as dramatic highs and lows. Where did the market reverse? I want these kinds of levels where the market made dramatic choices, and they work over and over and over again. We don't care about the how or the why they work. We care that when we look at the charts, we see reactions. So if you have good levels on the daily, they will match on the weekly because it's where the big reversals came. That's where we want our levels. So I stick to the daily because then I can also do something like this where we can identify these gaps because I do think gaps are important, and so I do most of my charting on the daily. Oh my God, you guys are so funny. You have to totally and pass it to the next guy. Okay, we're kind of starting to run a little late here. Okay, so we've done that. Long time frames. Gonna be real quick with this one. So I have two combos that I love. So on a long time frame, we're gonna clear this giant set. On a long time frame, 20, 50, 200 SMA. These are tried and true. Big money uses them, CNBC uses them, everybody uses them. These levels are crucial. Today, I was wondering if we were going to go tag this 50 SMA. It was at least what I saw, and I'm looking here. I see one touch. What I had seen was we have not touched we've touched the 50 SMA during trading hours one time since April. And as I'm looking at this, it's the truth. This is where I wanted to buy the dip. I was 664. I was swinging long. 664, 665. I was swinging long on this thing. These levels will almost always provide a reaction. Sometimes it's a big breakdown and sell. Like we can put this. That's the 20 SMA here. Sometimes it's a big breakdown and sell, or like here's this was the SMA. Look at what bounced us when we got below it. We sold. We were unable to reclaim it. Sold heavy off of it. These 20, 50, 200 SMAs are just really, really classic things to use. I check them all the time. If something is trading around its 200 SMA, it instantly has my interest because of this situation. Generally speaking, if you get under that 200 SMA, you only got two options. You're going to get back over it quickly, or you're going to see some heavy selling. On the upside, you break above it and you hold above it, you are likely going to see some upside buying. There are levels that don't come into, they don't show up a lot. This 200 SMA does not show up a lot. When it does, it is worth noting. And when you see these on the daily time frame, I use SMAs on the daily time frame because they're smoother. They don't get, we discussed the math on them. These are literally 20 SMA. You add the close of the last 20 candles, divide by 20. That's your average price over the last 20 days. 50 days, 200 days, when you start talking the 200 day, the reason it matters so much is that, based on average price paid over the last 200 days, virtually the whole trading year, 3/4 of the trading year, people will start going red on the year. People will buy or sell heavy around these things. Same as the weekly, it is almost never comes into play. And when it does come into play, you need to watch it. It will oftentimes be the bottom. Markets love to track to that 200 weekly in times of bad to really confirm what's going on. And you have to think when you're looking at a 200 weekly, you're looking at 4 years, over the last 4 years, just short of what's the average price paid? So Do people really want to give up 4 years of gains if they have been, dollar cost averaging? No, they don't. And so you can see very, very rare. We hit it back in 2011. We hit it in 2016. Shocker. We hit it in, oh yeah, 2018. This is likely the 2018 financial crisis slash government shutdown. And then obviously COVID, obviously 2022, it was marked the bottom and we got real close to it in April. So major, major level, in my opinion. Any questions on that? Again, there's something that they don't always come into play, but when they do come into play, take note of where they are. In my opinion, you can basically put this level on your chart, and if we get above that tomorrow, we're going up, in my opinion. Like that basically be my line in the sand into tomorrow. Okay, so next we're gonna talk about an EMA combo that I use both short and long time frames, but that is really, really good on the daily time frame. And this is the 5 and 13 combo. I have been a dip buyer at the 13 EMA for basically the last 6 months. And then even if we look before back through our 2020 rally or 2022, 2023 rally, this thing was undefeated. This was something that I personally only used on shorter time frames originally, and then Tilly was like, "Oh, well, you use that too?" I use it on the daily, and then I saw the power of this thing on the daily. When we start to get turnovers and it starts curling down, we can oftentimes see a little bit of selling. We get back above it, we can oftentimes see those binds, and it will very frequently offer you a great dip buy EMA to EMA. Buy that 13, run it to the 5, maybe you get more. Buy that 13, run it to the 5, maybe you get more. Rinse and repeat. It's been an absolute beauty. You can see we're getting below it. Still a little up there. That would be a very, very nice target if we can get above that SMA that we were talking. And that SMA likely lines up with the top of this gap. That's where we should be looking for upside tomorrow. I'm not saying we should be looking for upside. If it comes, that's what we should be looking for. So then next one, man, we aren't going to get to Bollinger Bands tonight. So the next one, and this is one that basically nobody will talk about. 1334. I think for the most part, people quit using the 1334 back, like, I don't know, before all of you were born. I love it. On the daily time frame, same thing. Until Tilia told me about that 513, this was my long time frame EMA combo. Great for swing trading, great for dip buying. You have that slightly longer period, so you aren't as closed up as a 5 and a 13. And you guys can see here, the 34 has been money. And then for anybody who is in pro today, part of us looking, and we can even put this on, here. Part of us looking for some of those dip buys midday was that 34 EMA. That was, again, none of these are cut and dry, but they're just additional confirmation at big points. And so we can see on this combo with our 13 and our 34, when we touch it, we tend to snap back. We had the little crazy tariffness, but you can see the market since, well, April 30th has not wanted to spend very much time below this 34. So this is kind of turning into my make or break right here to see if we might get a little bit more pullback to some of these lower levels finally. But this 1334 is deadly. I mean, this is a really, really good one. Okay, let's see. Lucas, so we had the 5 and the 13 and the 13 and the 34. How does this all apply to individual names? Exactly the same. So this is something that I've been, discussing. Is there some blank? I don't know, whatever. Let's clear this drawing set. This is something that I've been discussing with people. I don't care what you're looking at. I don't care if you're trading futures. I don't, okay, so CL gold, those things that have some fundamental influence a little different. I don't care if you're trading futures. I don't care if you're trading options. I don't care if you're trading shares. I don't care if you're on the 5-minute or the daily or the weekly. All analysis is done the same. We are always looking for consolidations, ranges, breakouts, all of that stuff. Doesn't matter if it's on the 5-minute. The bigger time frame is always going to carry more weight, but it doesn't matter what you trade. The ideas are the same. So we can see again on Apple, obviously Apple struggled because, so heavily affected by tariffs and then also getting hated on by name by the president, didn't help it. Once we were finally able to reclaim it, same thing since August, we have not wanted to be below that 34. So applies all names. Oh yeah, look at that. Luis gotcha. Applies to everything. Full boarding calls moment. Dude, you guys have been cracking me up today. So yes, you can. That is, um, let's see, we can go back to it. You're asking about buy 13, sell 5. Yes. So you can see, and you will get some breakdowns because this thing is so tight. But this move is money. These dips down to it are money. Sometimes you might get blown out, but these reclaims buys, you look to buy these dips and try to catch those moves back to it and find an EMA combo that works for you. And sometimes they're going to start going sideways and wreck you. But excellent little move that happens more often than it doesn't happen. When we tag that 13, we tend to see the 5 pretty dang quick. Pretty dang quick. However, that type of trading is not for everybody. Those quick moves are not necessarily for everybody. Don't know why. 1334, friendly. 34 buys, run it to the 13. 13 can become your stop. This is money. And on, what's something that's done nothing? Oh, well, Nvidia's been kind of sideways. So see, when EMAs are sideways, they don't help you. Trending is where we care. Nvidia's done, yeah, and don't get me wrong, nice big old breakout that it's now given all of it back. Nvidia, if you ask me, has done nothing since July, as far as I'm concerned. Chip trade has had little to no interest to me for a long time. So it's done little to nothing. So sideways EMAs, no good. Big old trenders, beauties. We know, look at this. Microsoft just rode this 5 EMA for or sorry, this 13 EMA for, I mean, what? We started in May and we didn't close under it until August 19th. I mean, these things are money, money, money. Very helpful on swings, very helpful on those kinds of things. Don't get me wrong, you trade shit stocks, these types of deals, your NBISs and that kind of stuff, super unhelpful. You don't need you should not be holding trades that are dumping 20% against you day after day and that kind of stuff. But real names that move relatively logically, they're going to do great for you. I mean, pull up any of your major names in some of well, I guess bunch of sideways, but nice long run out of this thing. We saw where our good dip buys were. Definitely take advantage of them. Oh yeah, dude. Thursday is my hands down favorite day to trade, without a doubt. I mean, Friday's fun, but it's not even about shit's just make believe. Sorry, pardon me, but shit's just make believe. It's fun, but it's not like real trading. But Thursday is fun because you have almost as cheap as same day contracts, but you still have the safety of one DTE. So I love them. Well, yeah, I mean, Nvidia, and yeah, don't get me wrong, Nvidia, sure, it's great to trade, and there's plenty of trades in here. I'm just saying, big picture, it hasn't done anything. Like any profit made on Nvidia was made on this pop and this pop. So there's been 10 days to make good money on it and a whole bunch of days to kind of get, some nice scalps. I love that kind of trade, and it's nothing against that. But we're just talking, these EMAs are telling us that you really don't want to be that involved in it. Could be the dip buy of a lifetime though. Nvidia to 195 tomorrow. Oh, dude, Iran is so funny. That one's a shit stock for sure. Because good earnings and a nice well, I guess it's kind of sold now, but it's so funny that this thing popped 8% on earnings, but when you are down 12 or 13% on the day, it sure doesn't look very good. So crossovers are tricky on EMAs. I'm happy you asked that question. Crossovers are tricky on EMAs because the thing that you have to remember is all indicators are lagging. So we're well above them. And we've been above them for a week. So here's the cross. So when your cross shows up, that's where you can start to look for a dip down into them. You can see, I mean, I was just looking for a quick example. We didn't really get the opportunity here. But and we already, SPY already popped $20 above it at one point. And so You want that break, you want that pullback, you want that confirmation. And the thing to remember is this cross didn't show up until this day because this day has to close for there to be data. So we don't, we have got well above it. And the cross took, 1, 2, 3, 4, 5, 6, 7, a week, 7 days, 7 trading days to happen. And we were never really provided a great entry. On the other side, you might get a cross like this that's going to show up here. Then you get the bounce to it. This is an entry you like. But this is going to be the more common setup that you see. This is just a really nice entry, which we didn't know was about to happen, of course. But you want those crosses to show up, and when you're on the daily, it lags because all indicators are lagging. But you buy here, then I mean, you need to be trimming. You don't just diamond hand things forever. You can buy these breaks below, your stops under it, buy these breaks below, your stops down here, and look to catch those nice swing trades. And then as the pullbacks start to happen, you want to be selling and looking for a new entry on the trade because you might get this nice move up, and then this right here, where we go straight sideways for days, hurts you. It's not worth it to hold through there. So you catch your volatility. When the volatility stops and you're likely pulling back into the EMA, you exit your trade. And when you get your EMA test, you start to look to enter that trade again. So yeah, you're kind of saying what I said here. The thing is, the market's very rarely going to give you what you want. And because indicators lag, you can't just say, like, oh, give it 2 weeks. Because, like we look at this one, here's the cross, the entry showed up 2 days later. Like I said, it's not always going to be like that. But I honestly like some pulls down like this and some first attempted breaks as the short. I like this short. Almost more than this short, because yeah, I mean, well, granted, he got a $10 dump or whatever, which is sick, but this is a reasonable enough short with a very tight stop on it. Same as up here, I'd probably be looking to stay long here. I mean, the cross hasn't happened, but we were kind of starting to think it might. And then you can try to buy these dips. These start to look more appealing to me, where a trend is getting established. So then you can swing, and I'm not saying swing forever. Granted, this thing, like if you had like end of year calls and you use the 34 as your stop, you gotta get your ride from 576 to 660 before you got stopped out, which is pretty sick. Talk about the death cross? Nope, I would never talk about a death cross because they're useless. The amount of money I've made buying calls on a death cross and buying puts on a golden cross is heinous. So the cross on the left to me is better because here's your cross. Here, 2 days later, you get a real retest of it. So, like, and this is hindsight trading. So we get to pretend like we're the greatest people ever. So say we identified a couple days before, okay, we've got a cross. I'm going to short the next bounce to the EMAs. That can be our plan. And we have that plan for 2 days. Here is where our plan shows up. 2 days later, we're shorting 596.50. Our stops over 599. And looking for some amount of move down, maybe down to here. We of course don't think it's going to come in a day, but this is just a really nice entry. Don't get me wrong. We're looking at SPY. I would, go to the rest of the market to confirm this is going on. But if we're getting across and we're seeing heavy selling, that means the market is, because SPY does not have a mind of its own. It does what's inside of it. So to me, this is just a very realistic, nice entry. You even got a little bit of a double top going on here. You got a little bit of resistance over here, your 599s. So, the risk reward greatly favors being short right here, even though we're coming off the back of, I mean, and what was it? A very, very strong bull market, leading into that, obviously. And so, you're coming off the back of that, but it's a reasonable enough short. Over here, you get the break, the cross comes later, market's already ripping, you never get a real retest. So to me, this is just more reasonable. This is just sort of like, and of course it's off the back of tariff, the tariff fold. So I would have been scared to buy this one, but ultimately it worked. And you want more, we'll be getting uh we'll be getting in, like we'll be getting into how to trade these in some of my later lectures. Here's President on Swing My High Swing every single day. Yeah, ribbon should be pinned in ribbon should be pinned in there. Uh, if it's not, send me a DM. I probably won't get back to you tonight, but I will try to get back to you tomorrow. Yeah, they aren't useless after all. You just gotta ignore them, you know? There was like I swear AT&T like got downgraded by like 4 people and Death Cross that day. And then oh my god, it ran 100%. Oh, KP, I take it you weren't here early in the day or early in the lecture. I'd recommend going back and uh checking on the previous lecture or the beginning of this lecture. It should be recorded. But we talked all short term stuff earlier in the lecture. But with that, unfortunately, we didn't get to Bollinger Bands. No, Joshua, we have 17 analysts in OOT. We don't need any more alerts. That is for sure. No more alerts. Alerts. We got plenty. Just follow Shark. You want to follow Swing Trader? Follow Shark. Yeah, Shark's the go. Yeah, no, you don't even need me. Yeah, dude, you want to Swing Trader? You just need Shark. Shark is the absolute goat. Yeah, I love that guy. That's my brother. Okay, well, with that, you guys, we're gonna call it a night. Thank you so much for being here. That was awesome. Really enjoyed the lecture. Hopefully we got everybody's questions answered. As always, feel free to DM me if not. But thank you all, and we will catch you tomorrow morning, Friday. Hopefully we can all lose some money together and have a good time, and we will catch you guys later. Have a good one.